And so I would pour through volumes of businesses, and I would find one or two that I could put $10,000 into or $15,000 into that were just ridiculous. They were ridiculously cheap. And obviously, as the money increased, the universe of possible ideas started shrinking dramatically. The times were also better for doing it in that time. But I think if you're working with a small amount of money, with exactly the same background that Charlie and I have, and same ideas, same whatever ability we have.
We all dream of a life where we could wave goodbye to the daily grind, bid farewell to the 9 to 5, and escape the clutches of that soul-sucking cubicle. But despite all our efforts, we find these dreams unattainable. Well, buckle up, because I'm about to reveal the secret to making that dream a reality with my 6 game-changing investments. Imagine a life where you call the shots, where your money works for you, and where you have the freedom to pursue your passions, travel the world, and live life on your own terms. So, grab a pen, get ready to take some notes, and get ready to say goodbye to the daily grind once and for all. Market ownership. Before we consider passively investing money into the stock market, we must know that if we aren't willing to own them for 10 years, we shouldn't even think about owning them for 10 minutes. People we all recognize as billionaires do this, and we want to be like them. From the owner of Microsoft, Bill Gates, to the Amazon founder, Jeff Bezos, they've all got their hands in the cookie jar. So, how can you get a slice of the pie? As for me, I make use of exchange-traded funds. These funds give me exposure to a wide range of stocks. Instead of spending time researching individual stocks, I rely on these ETFs to provide diversification and broad market exposure. Every week, a predetermined amount of money is automatically pulled from my bank account and invested into my passive stock market account. This account is distributed among the different ETFs in my portfolio. I consider this a separate strategy from actively investing in individual companies because it provides me with a consistent and passive way to grow my investments. The beauty of this approach is that I don't have to constantly monitor the market or make adjustments based on its performance. Whether the market goes up or down, I stick to my plan and let my investments passively grow over time. I use a platform called Vanguard, which simplifies the process for me. Once a week, on Thursdays, money is automatically withdrawn from my account and invested according to the distribution I've set for my ETFs. Vanguard is my preferred platform, not only because of its user-friendly interface and complete automation, but they also charge me no commission for trading my ETF online. By investing passively on a regular basis, I'm able to harness the power of compounding and let my investments grow steadily. I find it convenient and hassle-free, as I don't have to worry about timing the market or making frequent decisions. Own a cash-producing business.
The cash flows are printed on the bond. The cash flows aren't printed on a stock certificate. That's the job of the analyst, is to print out, change that stock certificate, which represents an interest in the business, and change that into a bond and say, this is what I think it's going to pay out in the future.
If you're eager to build wealth, owning a business can be a game changer. But guess what? It doesn't mean that you have to go out and start a business from scratch or be the one hustling and grinding day in and day out. Starting and running a business isn't for everyone because it takes a unique set of skills, know-how, and a stomach for risk. However, there's a smart alternative that everyone can explore: owning a business through our tax system and society. Let me break it down for you. When you're the owner of a business, you reap some serious benefits compared to those who work for someone else's business, especially when it comes to taxes. So here's the strategy. Aim to be a business owner without necessarily getting tangled up in the day-to-day operations. This way, you can savor the perks of business ownership without the stress and responsibilities that come with running the show on a daily basis. Sounds pretty sweet, right? We know how it usually goes when we're working a regular job, right? We earn our hard-earned money, pay our taxes, and then use whatever's left over for things like vacations, cars, and homes. But hold up, because owning a business changes the game in a major way. Here's why. When you're a business owner, you can actually spend money using pre-tax dollars, as long as it's for business-related stuff. That means you only have to pay taxes on what's left after deducting your business expenses. Some weeks ago, I had to travel to some awesome places like New York, Florida, and Texas for business purposes. But guess what? I turned it into a fantastic vacation too. Why? Because these trips were business related. I could use pre-tax dollars to cover expenses like meals and hotels. It's like getting the best of both worlds. Then, when tax time comes around, I can deduct these business expenses from my earnings. It's a clever way to use pre-tax money for personal benefits, which is simply not possible if you're just an employee. Pretty neat, huh? Now, let's switch gears and talk about the other side of the coin, cash flow. When you own an established and profitable business, you get to enjoy a slice of the juicy profits every single year. It's like getting a sweet paycheck as the owner without necessarily having to be knee-deep in the daily operations. That's why it's important to understand the ins and outs of owning a business, rather than just merely working in one. But when you don't want to start a business, how can you own one? Well, there are a few routes you can take. You can buy an existing physical business. And trust me, there are plenty of websites out there that list businesses up for sale. The key here is to find a business that doesn't demand your constant involvement in the day-to-day operations. For example, you could consider purchasing a hotel or even diving into the world of franchising. The goal is to own a business that generates solid cash flow without chaining you to the cashier's counter every single day. Of course, you'll still need to oversee the business to keep things running smoothly, but you want to free up your time and not be trapped in the nitty-gritty details. Another option is to dip your toes into partial ownership. You can team up with a few friends to buy a business or invest in the stock market by snagging shares of a profitable company. While owning stocks won't give you the same tax benefits as owning a physical business, it still comes with its perks. For instance, the money you make from stock market investments is generally taxed at a lower rate compared to your regular job income. The key here is to invest in companies that are rocking it and bring in value in cash flow. You want to be a part of these companies' success, whether by owning a slice of the pie or even the whole shebang. When these businesses make money, you get a piece of the action. But remember, the focus should be on ownership rather than being knee-deep in the daily grind of running the business. Real estate.
So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental properties.
This is one of the oldest tricks in the book when it comes to setting yourself up for life. These investments provide diversification and can offer stability and growth opportunities outside of the stock market. When people talk about diversification, they often limit it to having different types of mutual funds or ETFs in the stock market. However, relying solely on paper assets leaves your portfolio vulnerable to market crashes and downturns. By diversifying into real assets like real estate and owning a business, you can mitigate some of those risks. Real estate investment can provide steady income through rental properties and the potential for long-term appreciation. It also serves as a tangible asset that isn't solely dependent on market fluctuations. Owning a real business allows you to generate income and build equity through entrepreneurship. It provides an additional stream of revenue that is dependent on the stock market. By incorporating these real assets into your investment portfolio, you create a more balanced and diversified approach. The stock market historically has shown annual growth of around 8 to 10% over the last century. However, it's crucial to remember that past performance is not indicative of future results. Diversification across various asset classes can help protect your wealth and provide alternative sources of income and growth. It's important to conduct thorough research and due diligence when considering real estate investments or starting a business. Each of these avenues has its own unique set of risks and rewards. By combining different types of investments, both within and outside the stock market, you can create a well-rounded portfolio that aligns with your financial goals and risk tolerance. Remember, diversification is key to managing risk and maximizing potential returns. Gold and silver.
You don't buy gold coins to make money. You buy gold coins because the dollar is going to go down. I don't trust the dollar. For most of my life, I've saved gold and silver. That everybody can buy a $20 silver piece. Everybody can afford 20 bucks. Will they do it? No. They'll be at Starbucks sucking it down instead.
You know, those shiny metals that have been around for ages were the first medium of exchange in international trade. See, fiat currency is just pieces of paper that the government and Federal Reserve Bank print. Now, this can be good news if you understand money and have financial education because it creates more inflation. And guess what? If you own assets or means of production, you get to make more money. But here's the catch. It's not so great for the financially uneducated folks out there. Why? Well, inflation acts like a hidden tax, and it's you who ends up paying the price. Now, I don't say this to scare you, but let's face it, when you print too much money, those dollars you printed become worthless.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now, you'll have 1 ounce of gold.
People don't want to work for pieces of paper anymore. They want something more valuable, something real. You see, everything has a lifespan, even economies. Excessive money printing has caused the downfall of many civilizations and powerful economies throughout history. Take the ancient Roman Empire, for example. Their economy was based on silver. But when the government needed more silver to fund its operations, expand its military, and invest in the community, they started debasing the silver. They mixed it with other metals, creating fake silver. Eventually, people caught on and realized it wasn't real money. They wanted the genuine stuff, and that's when the civilization began to crumble. You need a backup plan for your investments, yourself, and even the government and society, just in case they go overboard with money printing. This is where physical gold and silver come into play. Owning the real assets, the physical gold and silver, can provide a sense of security. The idea behind owning these precious metals isn't necessary to make a huge return on your investment. It's more about having insurance against worst-case scenarios. It's insurance against the economy going haywire or the dollar losing its value due to excessive inflation. Now, don't get me wrong, there's a time and place for everything. I'm not saying you should immediately rush out and spend all your extra cash on gold and silver. No. The first step is to start generating some cash flow, build your wealth, and achieve financial freedom. Once you've reached that point, it's time to think about safeguarding your wealth. That's when you should consider owning these precious metals as a part of your investment strategy. Knowledge.
I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports, and I read a lot of other things.
You've got to invest in knowledge that is cumulative. So the knowledge builds on itself, and this is the key to breaking free from the dreaded paycheck-to-paycheck cycle. Personally, I don't hold back when it comes to investing in my own growth. I'm always shelling out some serious dough on books, courses, seminars, or even hiring coaches or consultants. Why? Because I know that learning from those who are more knowledgeable than me is worth every penny. Instead of trying to figure it out on my own, I tap into the wisdom of these experts who can teach me the ropes. But hey, here's the deal. When you're investing in your education, you gotta be a bit cautious. There's a whole bunch of folks out there selling these get-quick-rich schemes, making wild promises of earning 6 figures a month in the blink of an eye. It's so easy to get swept away by the allure of instant success. But let me tell you, when it comes to investing in education, you need to have a clear purpose in mind. Are you eager to learn the ins and outs of building an e-commerce business? Or maybe you're diving headfirst into real estate or the stock market. Whatever it is, make sure you identify your focus and invest accordingly. Whatever you want to learn about your finances, make sure that the person teaching you is actually practicing what they preach. You won't always find this in traditional schooling, trust me. A lot of teachers are great at teaching, but may not have any real-world experience in what they're teaching. When it comes to financial education, you want someone who's been there, done that, and achieved the kind of success that you dream of. So, do your homework, do some research, and choose your mentors wisely. By investing in your education, you're basically fast-tracking your learning journey. Sure, you can try to figure some things out on your own, but why waste precious time when you can learn from someone who's already been down that road? They've made the mistakes and learned the shortcuts, so they can guide you to success in a fraction of the time. It's like getting a VIP pass to knowledge and gaining a major edge. Cryptocurrency. The whole idea behind cryptocurrency is a movement of people who want to break free from traditional fiat currencies like our good old dollars. You see, dollars can be easily manipulated by the government and the banks through endless money printing. Cryptocurrency offers an alternative, a decentralized worldwide digital currency. Anywhere in the world, the value remains the same. This is a currency that transcends borders and operates on a decentralized platform. Now, before you rush to the nearest store and try to pay with Bitcoin or Ethereum, hold on a second. Cryptocurrency isn't widely accepted in physical stores just yet. But the beauty of it is that as time goes on, and as people become more open-minded about cryptocurrency and grasp the power of blockchain technology, its use and acceptance will likely expand. A major concern with cryptocurrency is that most people buy it with dreams of getting rich quick. But let me tell you, that's not my primary goal. For me, it's about owning an asset, just like I would own gold or silver. It's like having another form of insurance or currency in my portfolio. My focus is on the long-term game, not chasing immediate massive returns. Behind cryptocurrency lies the power and value of blockchain technology. I won't get into all the nitty-gritty details of blockchain right now, but just know it's here to stay. Owning some cryptocurrency can act as another hedge, another layer of protection against the vulnerabilities of traditional systems. It's about taking back ownership and having an alternative form of currency. So, when considering your investment portfolio, don't forget to explore the world of cryptocurrency.